So a follow-up on the trade case study that we took. So on 30th, I pushed out a video explaining JPY secrets on how to be able to trade JPY pairs. The video is available on YouTube. And then on October 1st, this is when I sent out the trade, and that was Nzdjpy. This was the trade, you can see. So I just want to do a trade case study for the JPY trade. So we had JPYs looking good for the week, especially with this impulsive move to the downside. We had a strong impulsive move to the downside. And then we're like, this is a bigger correction and then another impulse. So we're able to get a trade here on this impulse. And then this was our first target was down here. And then we were also thinking that once we achieve that first target, which is there, we could actually have possibly the trade coming all the way down up to here. So this was the overall target, but we wanted to take some partial profits here at this nearest low. And then from there, so that is exactly what happened. And then here, the market actually, after hitting the first target, the market came back and then reversed. As you can see here, we were saying, so this was the entry, and then 47 pips, 90, 120 pips. So we're able to make 120 pips with the first target hit, and then we said break even and then swing. So it was the break even that was taken out, but the 120 pips, we were able to maximize on them. So let me just take you through the trade, exactly what we consider for us to be able to take the trade. So I was majorly focusing on the JPYs this week. Like I'd say, JPY structures were looking good. So on the JPYs, on the weekly time frame, this was our all-time low. So we just want to mark our lows, and then that was our all-time high. And we had an impulse, then correction, then this was our resistance area here, because this was the area the market had failed to break. And then of course we had marked this area here as our another structural break. Then when we come to the daily time frame, this is exactly how the pair was actually looking. So we clearly had our resistance area in this area, and then the market failed to break this resistance, and then we thought from here we could actually head all the way up to these other lows here. And when we came to the 4-hourly, this is where we began to have good structural break. So on this strong candle break here, this is what we call our price difference area. And this is what we had marked, this area here. So whenever price return to this area, that is where we shall look for trades, because the difference between this high and this new low is actually here, where the market took away these lows. So when we came to the 15 minutes where we wait for trade, I had said, so on the 15 minutes, once the market reverses into our price difference area, the next thing we look for is that M pattern. And once we see the M pattern around this area of interest, that is when we actually take a trade. And then we have our stop loss above the structure. And then we target the first low, which is always down here. And then once the low is achieved, we can then begin to break even on the trade. And then we take to hold to the next lows. So that is exactly what had happened. And this is why we had the entry here. You can see this was sent at October 1st, 12 minutes past 10. So, and then it played out by evening, just within a day, we had hit our first target. And then that is exactly what happened. So we're also looking at the rest of the JPY pairs, but I'd say we would only enter when we see a double top in our area of interest. Just like we are having this now as our next resistance. So the only way I will trade this resistance is when I actually see another double top here, or head and shoulders. That's when I can trade that. So this is what I want to see for me to be able to trade. And to me, JPY is still looking bearish. The bigger picture, we could actually reverse from here, and that will be maybe another observation for the week. So that's what I wanted to share with you. See you.